Hello, everybody. Today is Wednesday, January the 2nd, 2013. My name is Michael Wright, and this is the Elliott Wave Daily Video. Just before going forward, please do pause the recording and read the risk disclaimer. Alright, guys, let's jump into performance. As we wrap up 2012, we were up 3,500 pips for the year. And in terms of accuracy, we basically hit 11 out of 12 trades, giving us the accuracy of 90%. So indeed, that does bode well. 91.6%. All right, so almost 92 on the round. So a pretty great year in my opinion. Our best trade last year came in October. Our best trading month came in October, which we marked up 826 pips, and our one and only down month only took away 156 pips. All right. Thus far, for the month of January, we are up 212 pips. So we'll see how things come to life this month. But great start, and it's only the second day, and the second day just started. So looking forward to a prosperous month and a prosperous 2013. All right. Away from that, uh, as of late, we have two open trades. And just before we dive into that, one topic I want to touch base on is the different brokers. Guys, most of you guys know this, but we have no control over your broker. You picked your broker, okay? We are traders, all right? Plain and simple, we are traders. I know a lot of different members want a lot of different things, but we try to keep it as simple as possible in this complex market. So always note that, okay? So just keep that in mind, and hopefully sooner than later for us, we will have the whole IB point of reference intact. All right, but away from that though, we are short Aussie dollar from 104.89. Okay, basically played this full back test and also the 61.8% Fibonacci retracement on the recent downswing. So looking for prices really to start buckling down into that 103 area. All right, and that will give us a clear five waves. And now start looking for divergence. Basically, we'll look for a low in price action, but see that the RSI not really get into those oversold territories. All right, so let's see how that comes to life later on. The other trade we are in is a long dollar CAD, so still playing the dollar strength. Okay, 78.6 fib trend line support. So very interesting to see if we start getting some strength to the top side. All right, so I do like both trades. So dollar CAD up a little bit, about 3 pips right now, and then Aussie dollar, we moved stops already to break even, so we'll see how that plays out. But again, the setup, and we'll start looking for some legs to the downside. Confirmation Ichimoku was right. Basically, we rejected the top of the cloud, but I would like to start seeing. I would like to see the taking Cajun cross on the hourly to the downside, but again, this is a little bit lower around that 104.40 area, so that will get some strength and add more color to the bleak picture. All right, another interesting pair, I was talking about this in the chat room, is the Euro Aussie, right? Because in my opinion, as long as we hold above that previous high on the day, this will likely start to get some legs to the top side, and then with that other extension reaching towards 129. All right, so looking for 129 on the Euro Aussie going forward. Again, another possible good play. May take this sooner than later. Here, same idea. Watch out for that support. Even if it pushes a little bit lower, could provide another good re-entry. But confirmation here comes on the break of that top side resistance, and see a flag to the top side. All right. So away from that, we can speak about the euro dollar. Euro dollar becoming of interest, right? Preferred downside. Now it looks like, I know, in November, December, things started breaking apart in terms of correlations. But it looks like from a correlation standpoint, that we could make a U-turn from around current levels into that 131 area. 131 could provide bounce. 131, you see the support zone here, and then also the retest of this trend line resistance now turns support. There's no real divergence just yet, so I'll be even cautious to see a spike to 133.40. All right, before lower, because that will mark the divergence, that will mark the 100% fib extension, etc. All right, not playing either side. Only way I'll play this trade is if we get down to 131. I'll play that long though. All right, I'll play that long for 133.40 targets. Pound dollar. Pound dollar broke above the 100%. Let's take away these trend lines here. All right. So could extend higher. Again, similar to the euro, I don't like this play right now. I'd rather wait and see on the pound, see how the market develops there. But watching for clearer developments going forward. And then we already spoke about the dollar CAD. I'm also interested to see this dollar Singapore dollar. Cause it's actually my favorite pair. I haven't been trading it quite recently, just because it's been chopping around. But looking for it to gain some strength to the top side, at least to 122.60. So basically, with Dow Singapore dollar, I'm just waiting, and more so waiting for that correlation to really gather some strength and match up with other pairs there. Dollar index. Similar to everything else, broke top side. The count a little bit shaky to say the least, but as long as this top side B holds, what we could look for is another AB and then C to the downside, or turn this to ABW, looking for an X into 80.25 and then a Y bottom side push. All right, and away from that, we could take a quick look at some of these yen pairs. Uh, Now, dollar yen still could push a little bit higher. All right, still has a little bit more legs. 87.70. That may be enough to top this pair out and provide a massive breakdown, in my opinion. So I will be looking to top pick it around that area, but more importantly, looking at the other yen courses as well for confirmation purposes. 117.40. Watch out for the euro yen. Okay. Um, Again, another play going forward. We played out a good euro yen, I think, last month, to scale back those losses, but two massive gaps. Okay. So for January, February, I will be keeping a close eye on these yen pairs. All right. So two gaps to keep notice of. So if we get up to 117, depending on where the other pairs are at that time, could be a good play back into that 108 area, and then even could go a little bit deeper into 101, 103 in a full massive turnaround, as usually in a C wave. Could just flip around to the bottom side. Now, with that being said, if that begins to play, I spoke about this in, I believe, the last webinar over the weekend, but that plays out, then this 103, the 102, 103 targets will provide a massive, massive attraction to the top side, and this will be one I'll be looking for to hold for maybe about 2 years or so. So for those long-term traders, euro yen is becoming of interest on both sides, right? Bottom side first, and then look for a flip to the top side. All right. So we'll see. But thank you guys. Cheers.